Hello everybody, it's Tortoise Investing coming at you today with 3 dividend stocks that you can buy and hold forever. We're going to be looking at these through Qualtrim Insights. We're going to be taking a look at Pool Corporation, Hershey Company, and Vici Properties. Before we dive into those, if you're new, please hit that subscribe button. I would greatly appreciate it, and drop a like. Those things are super free and easy to do, and it helps me out a ton. And before we dive into the analysis of everything, this is financial advice. Always do your own research. Let's take a quick look at the portfolio. We were up 23.4% on the year. This is our allocations and how the portfolio is looking so far. And I'll give you a peek at the holdings tab. There we go. Unrealized gains. Our top 3 gainers: Texas Roadhouse, Canadian National Railway, and Apple. Bottom 3 positions: SCHD, Extra Space Storage, and Hershey. So the things we're going to be taking a look at: Pool Corporation, just free cash flow yield 6.27%, dividend yield 1.25%, payout ratio 30%. They have had a couple spikes this year, right up to 420 at one point, 380s down to 350. They are the pool company for all your pool needs. Anything and everything dealing with pool, they have such a grasp on that as a whole. Take a look at the revenue, growing at a rate of 12.2% over the last 10 years. Take a look at the free cash flow, 15.68% over the last 10 years. EPS, right in line with everything, 27% over the last 10 years. Crazy. Debt, last year they had $1.29 billion. Their EBITDA was $1.06 billion. My rule of thumb is I don't like companies that have more than 3 times their EBITDA in debt. This does not. Therefore, I think it's pretty manageable. They could pay this off pretty quickly if they wanted to. The dividend's been increasing at a rate of 19.2% over the last 10 years. That's just silly. That is some strong compounding going on there. And when it comes to share buybacks, slowly but surely over the rate of the last 10 years, 1.87% buybacks over that period of time. You love a company when they're buying back their shares. That means you get a bigger and bigger piece of the pie. And return on capital employed, this is above 30% for forever and a day. It's so good, so strong. You love a company that's got a strong ROCE, and this one definitely has that. Next up, Hershey, a favorite of mine, a huge position in my portfolio if you've seen it, at one rate up to $276 a share, just free cash flow yield of 4.12%, dividend yield 2.53%, and a payout ratio of 46%. Now take a look at the revenue, 6.75% over the last 5 years, pretty strong. Free cash flow, 8.27% over the last 10 years, pretty good. And here lately over the last 5, over double-digit cash flow growth. Love it. EPS, 10.6% over the last 10 years. Again, over the last 5 years, accelerating. Love to see that. Their debt, $3 billion last year. Their EBITDA was over $2 billion. So again, very manageable. They could pay that off with ease if they wanted to. And the dividend, 9.41% over the last 10 years. And again, it's been increasing at a quicker and quicker rate here lately. Love to see it. Shares outstanding, don't really do share buybacks all that much over the last 10 years, less than 1%. And the return on capital employed, 2020 was 19%, then it was up to 20.3%, 2021, and 21.8% in 2022. So ROCE is growing along with everything else. I love Hershey. I am long Hershey, and I intend, if it drops anymore, I'm going to have to buy some more. It's a really big position in my portfolio already, but if it keeps going, I'm going to have to jump in. Now, next up, Vici Properties. Now, a lot of you might be thinking you missed out on it back here in the low 27s area, but this thing was over $34 a share at one point, so it's still down about 15% off those highs. Just free cash flow yield over 7%, dividend yield 5.77%. We don't pay attention to payout ratio. This is a real estate investment trust. Always do your own research. When it comes to REITs, REITs are taxed differently. So make sure to look into that if you have not. They pay out their dividends from funds from operation, and they have to pay out, I think it's 90% total for tax benefits. It's a whole thing. Make sure to read up on that. Revenue has been increasing at a silly rate, 66.8%. Free cash flow is also going to be silly, 71.8%. The big thing with them is the dividend. They have such a high dividend, but they still intend to raise it at a rate of 7% going forward, which is just awesome. Over the last 5 years, you can see here 7.62% dividend increases. And again, from I think their last one was they went from 39 cents to I think it's 41.5 cents. So that's still a little bit over 7% raise. And it is real estate. They've been doing some acquisitions like crazy here, and their tenants 100% rent collection. Love it, love it, love it. Anyways, guys, that is the 3 dividend stocks you can buy and hold forever. I hope you enjoyed that. Again, make sure to hit that like button, drop a sub if you haven't already. And until next time, take care. See you.